All right, so welcome back.
Welcome back,
It's
guys.
been a while.
It's been a minute. Thank you for bearing with us. I believe that we both wanted to come back and tell you everything of what we were doing, but one of the reasons why we've been like so busy is because we've actually been taking care of our clients, and with that comes time and attention, and so yeah,
Yeah, it's been a crazy time. A lot of deals closing. You know.
you know. Yeah, so now that we have some downtime here, we really want to focus on like giving information and providing like raw feedback of what's going on the real market, between all our closings, our clients,
Mhm.
um, you know, some of our leads. I mean, there's some leads that we've been turning down because it's just not right. They're not in the right situation, and there's some lots of leads that we've been taking in because it's a great opportunity. So we just want to talk about all those aspects. And
Yeah.
of course, on the loan side, there's actually more things on the loan side to talk about than there is on my side. So this is the episode for this.
Like I said,
Yeah.
things are changing, especially and like he said, there is a lot of changes in the loan side that kind of we already know are happening. There's some changes on the real estate side that are kind of still in the air with that whole lawsuit going on.
Yeah, there's a
I
few
don't know if
like.
you want to touch base a little bit on that one.
All right, so we'll go in a circle. So we'll start with like real estate and where we think it might be going with affordability. And so right now there's this case, right? There's this case with the National Association of Realtors,
Hmm.
and which they're disputing where the sellers should pay for the buyer's
Agent,
commission,
yeah.
agent commission, right? So whenever a buyer is trying to buy a house, they're being represented by a buyer's agent. But when that home is sold, the seller usually pays that in their deal. So, with that being said, I mean, there's lots of pushback on whether the seller should be paying for this. And personally, I believe it's up in the air. If this hypothetically speaking, if this was to happen, and the NAR, the National Association, if realtors just lose this case, and it actually becomes a thing, then it really becomes a responsibility on the buyers, and when that responsibility is transferred to the buyers, meaning the person trying to buy the home, it means that they're going to have to put some more money down. And looking at most of our cases, especially with on your loan side, I mean, you're seeing lots of things are really tight,
Yeah.
in terms of people having that extra money saved up to buy a home and pay their closing or whatever it is, or just their down payment.
Yeah. And
It's
so I guess I can touch a little bit on this on like the loan officer side, like he mentioned, right now, and it's not that it's unaffordable. I don't want to say it's unaffordable, but
mhm.
we deal with a lot of first time home buyers. So for that first time home buyer, especially, they want to get in, start building up their wealth and, just get their foot in the door. Yeah, they might have, let's say 10,000, $15,000 saved up, which is amazing, by the way. Like kudos to you for saving that up, but a lot of that's going to go towards down payment and closing costs. Especially if maybe the seller's not willing to help. Even if they are, you might still have to pay a little bit of closing costs. And it's also, I never fully recommend for you to blast through your reserves. You should still have a little bit of money at the end. With that being said, if now they have another cost on top of that, paying for that buyer's agent, then either they're not going to have the money to, and they might choose to go without a buyer's agent, which in that case, they're unrepresented. The seller has the leverage. They can negotiate. It's like the seller's going to be like, okay, this is what I want from you. Either take it or leave it.
Mhm.
Um,
They don't have
and
direct access to what realtors have access to
yeah,
too. So I mean,
the way I view it is like that can lead to a scenario where, like I said, first time home buyers kind of won't have the funds or the means to do it, and so it's a scenario of, and I hate saying it this way, but the wealthier getting wealthier. The people with money can still afford to buy representation and afford to have their rights, fought for and negotiated,
mhm,
versus that, and I don't want to say smaller person, but just that first time home buyer, trying to put their foot in the door can't.
yeah,
And so they're going to be left behind versus, like I said, the wealthier
yeah.
will continue to buy property, will continue to be represented because they have the means to do so.
Mhm.
And so I think that can 100% affect, I'm sure if you're listening, you're probably either a first time home buyer, or you maybe have one property, two, like it's definitely hitting the smaller guy a lot more than the bigger guy.
Yeah, and picking back from what you're saying, I think This is all hypothetically speaking if this lawsuit is
Yeah,
passed.
yeah,
So I just want to
yeah.
make this clear. But if it goes within the seller's favor and the realtors association loses, then it's gonna just make it even harder for buyers to buy the first
Mhm.
property. First time home buyers, it's definitely gonna be a big thing for them. And yeah, I mean, if you're not in the game now, right now is the right time to start looking at it because of these things, certain things that can affect you later on. So that's just one thing. Again, hypothetically
Yeah.
speaking, we're always like, let's hope for the worst so we can be prepared. And that way it won't affect us as much. So that's why we want to let you know this news, and we want to, like, just be really real money
Yeah,
talks.
like,
Yeah.
be a parent about it. Like, know
Yeah.
that this is what's going on right now. We don't know the outcome. We don't have a crystal ball. This is what's going on, inside the
Hmm.
courtroom right now. If
Um,
the outcome comes out this way, then you're better off putting your foot in the door right now while you still can get, the seller to pay for your representation and make sure that you have somebody on your side fighting for you and that's paid for by the seller, which
mhm.
has been the way that's been done for over 100 years, since real estate started.
Yeah, yeah. So with that being said, we're gonna move into like what the market has kind of been looking like. I know we've provided some type of. I know there's a lot of like market takes and a lot of market updates, but we want to be really raw with what's been going on with our deals and stuff like that, and especially where we're moving towards to. I think we can all agree that you know Las Vegas has been growing more,
Yes.
and even though there's less and less inventory, home prices have been at a very resilient level where it's not really moving. It's kind of in a frozen position where it goes up a little bit, goes down a little bit, and it goes up a little bit and a little bit and a little bit. It might drop a little bit, so it's pretty stable in my opinion.
Yeah.
So with that being said, I think Alex has had more closings than me. So, kudos to him. He's a loan officer, so he works with multiple real estate agents, and he's been on a roll. So I really want you guys to like listen to Alex and what he has to say on the loan side, because I think I've always preached this, but I think it's more important to pick the right loan officer than it is your real estate agent. And me being myself as a real estate agent, like, I could care less if you go with someone, but you really want a good loan officer because he can move things around. And lately, I mean, he had a few deals uh, moving around in order to favor the borrower. So he can talk a little bit more about that. And yeah,
Yeah.
tell us
So
about that there's like, so interest rates. I mean, as we all know, like it's been going up and down, and it's been pretty high lately.
yeah.
But he's been coming pretty clutch.
And so, like he said, recently, rates have been going up. Just 2 weeks ago, the average rate was about over 8%. Um, and so, like I said, people are still buying because they're able to find good deals. Sellers are paying their closing costs, and for a lot of people, that's important. They have their down payment; they're willing to pay for that. Seller helps them pay for this closing costs. Well, I recently had this deal that 3 weeks ago we went under contract, we locked it up. It was locked up at 7.25. I mean, the borrower at that point he was still paying some discount points to get the rate even to 7.25. Well, as of this Friday, rates dropped a good amount. They dropped at least 0.5%.
Yeah,
And since I'm a broker, I don't just work with one lender. I actually have 100 lenders I can work with. What I ended up doing is I pulled that loan from that lender and sent it to another lender. So we went from 7.25. I was able to relock him at 6.75 with the same discount point. So his money out of pocket did not change. It's still the same amount to closing, but now he has a 0.5% rate lower, saving him over $100 per month, only because of how the market is moving.
yeah, and that's a really big deal, guys, because like you could be like already pushing it in this type of market, like you're stretching yourself out pretty thin because you're at 8% or 7.5%. And let's say you got some extra money and you want to use that extra money to buy down points, or you get extra concession stands from extra concession stands. What the hell?
Seller concessions.
You get extra concessions from your seller in order to pay down your interest rate. I mean, you could use that for your own down payment, or you can use that for your closing costs, but instead you're using it to buy down your points. And with this being said, I mean, it's really big, like, to know that your loan officers got you like that, to, like, know that not only are you saving an extra $200 a month, but you can, like, you were locked down and your loan officer is able to move around like this. So an extra
Yeah.
$200 or $100 goes a long way. That times 12 saves you a lot of money and you can put in your piggy bank. So
Yeah, because even like the part I didn't mention too is like, so this borrower actually, he was looking at rates himself, and so he saw that that Friday rates had came down, and so once I talked to him, he even told me, he's like, I saw rates came down, but I knew I was locked in, so I thought I was, SOL,
hmm
shit out of luck. He's like, I'm just gonna suck it up. I'm gonna close on the deal because it's still a good deal at the end of the day. Like, he's having the seller pay for his closing costs, so he's
hmm
only coming out of pocket down
yeah,
payment. So he's like, yeah, I'm gonna just suck it up. But no, I called them and I was like, hey, I was able to do this for you. I pulled this loan from here. I took it somewhere else.
hmm
You're at 6.75 now, saving you a little bit over $100 a month. He was ecstatic. He's like, let's go. Like,
yeah,
and like, that's the type of things that I want to do for my clients. Because at the end of the day, I can't say anything for sure, but I'm sure he's going to be a client for life now. Like, he's going to trust me for every home that he buys in the
for
future.
sure.
Like,
Yeah.
because he knows I got his back. Like,
Everybody deserves some transparency and knowing that someone's got your back like that. Well, with that being said, I bet he got a really good deal. So can you tell us about um what kind of like closing credits he got? And I want to talk about this because the reason why he's getting these deals is because of the interest rates going on right now. So a lot of people might see it as a negative thing, but in reality, since there are high right now and they just dropped like instantly within a matter of certain days, I
yeah,
mean, that could continue to happen, or, it could definitely happen gradually throughout time. So at one point, we are bound to go down on interest rates. So w- the good things that high interest rates bring us, we need to take advantage.
yeah. And so kind of, okay, so to reiterate, I think what Caesar's trying to say is, right now, because rates are quote unquote a little bit higher, sellers realize this. So they're willing to negotiate a little bit more with you than when rates were lower. And like he said, rates are going to be lower. I can't tell you if it's going to be in 6 months or a year.
Yeah,
Theoretically, I'm expecting more like a year.
100%.
But once rates do come down, kind of kills your negotiations. Like, there's going to be more people jumping in that have been waiting on the sidelines. Prices might start to go up. So right now is the perfect time to buy if you kind of need those seller credits or if you kind of want to negotiate a really good
Mhm.
deal.
Yeah.
And so
So
kind of talked about his deal, like Caesar asked. We went under contract with he put in the offer asking for 6K from seller credits, because his big thing was, I want to buy a house, but I only want to come out of pocket my down payment,
your down payment,
and
yeah.
so 6K covered his closing costs. So we went under contract with him just having his closing costs covered, but he didn't really have it, extra to buy down his rate. So it
Mhm.
actually would have even been higher than 7.25.
I did a mix
But
though. I did a mix. It was a mixture of bring down the purchase power by 20K. It
yeah,
was like 20,
yeah,
25,
yeah.
$25,000 under purchase price or under market value. And then on top of that, some
Seller credit, yeah.
sellers credit.
And so for him, like, he offered full price, but he did ask for 6K back. So that covered his closing costs. Cool. That was cool up front. He did his inspection, and I always recommend to do an inspection. As a lender, it's not required, but I always recommend it because 99% of the time you're going to get at least your money back for the inspection. Inspections are what, like $300, $400,
Yeah, like 300 bucks.
and you're probably going to be able to negotiate what you find in the inspection, at least that, if not more. So yeah,
100%.
so he did his inspection, paid the $300, $400. Inspection came back with, pretty normal things. It's a house that's been lived in. It's not a fucking brand new construction home. So the things that they found doesn't mean there's something wrong with the house, but he's just able to use that as leverage. He
Mm,
was able to get another 2,500. So now he already had the original 6,000 for closing costs. Now we have the 2,500 we can use for rate buy down. Golden.
yeah,
And like I said, we were locked in originally at 7.25. Rates came down. I was able to pull it, send them somewhere else, keep the same amount of discount points, and save them a little bit over $100.
yeah. And so um, we saw that literally around this time. This
Yeah.
is exactly what happened last year. And we didn't think, I mean, I'm sure a lot of people put this FOMO out, right? Where it's like, oh, this is probably, I don't even remember, but there's a lot of people saying that this is probably like the last time in like our generation where you're
Mm-hmm.
gonna be able to have these certain
Seller credits and
sellers
stuff like that.
credits and stuff like that. Well, here we are again, you know. And what history and data can tell us is that it's only going to happen when interest rates are at this point, right?
Yeah, yeah.
So again, touching base around that. If you're hearing out there that this is unheard of, I'm here and Alex is here to tell you this is heard of. Like this is what's supposed to happen because interest rates are at this level. If any real estate agent tries to tell you or any loan officer tries to tell you that this is the moment for you to buy in because this is like this is unheard of. No, it's heard of. Like it is a great time to buy, but just know that it's your time to negotiate and take those steps to be willing to see if we can get some type of bargain. And you need people to work for you, right? And not having them take control. So
Yeah,
as a real estate agent, as a loan officer, we're more than for it to like go and pay under 20K
like
or
find you a good deal.
find a
Yeah,
deal. This is your time to be disrespectful. Like
basically, yeah.
basically.
And like, we're talking about his deal now that we're under contract. I didn't really mention before that. Like I said, for him, it was important to only come out of pocket down
Mhm.
payment. So his offer didn't get accepted on the first deal, not even the second one. He went out, looked at a couple homes, did a couple of offers, and
Yeah. It,
it's your time to be able to do that. Realistically speaking, like, and I'll be honest, when I bought my house, I couldn't do that. I was in a different market where sellers were not going to pay seller credits, and I
yeah.
didn't really have time to look at homes. Now it's a little bit of different. Like, you can take your time, look at the home, do the offers that you want to do, and honestly feel confident that you're getting the best deal
Mhm.
possible.
I would
Like, it might take a couple offers, but at least that way when your offer does get accepted, it's a good offer.
yeah.
You know that you're comfortable with it, the numbers make sense, and you're not being forced into something that you're going to regret like a month or 2 months later.
100%.
And so with everything we've been talking about, like, right now, yes, I think right now is an amazing time to buy if you're ready to buy. That's an important, aspect of it too.
Right.
Like, we need to look at your finances, your assets, and make sure it's the right move for you. At
Right.
the end of the day, we're not trying to push, and at least me personally, and I know you feel the same way.
100%.
We're not trying to push people into a home just so that we make money. Like, if it's not the right move for you right now, I'll be honest about it, and I'm sure you will too.
Yeah, we could just use the latest lead we got, for example. Out of respect, we won't say her name, but we did have a family come up to us. It was a mom and dad,
Mhm.
kid, and then they had like a grandmother living
Yeah.
with them together. And there's a lot of situations where these big families live in these apartments and like they rent for a very long period of time because that's all they can afford because they don't have that build up either build up savings or two. I want to bring this up, but like immigration status is also a big thing.
Yeah, yeah.
And when it comes down to immigration status and when you're in the process of gaining citizenship and stuff like that, you can only really do so much with that to where it's only best if you rent rather than buy because you want to prioritize citizenship
Yeah.
over that. So in this case, I mean, this family came up to us and was really, really made it a mission. Like they really made it a mission to buy a home.
Yeah. It was like their goal.
And
Like, it was.
I actually met them from showing this specific home
Yeah, yeah.
that was a 4 bedroom, 4 bedroom, 3 bath. Around their price range, they were looking at around anywhere from 340 to 350. And I was showing this home to two families, and then she came through and she's like, "Hey, can I see this house?" I'm like, well, do you have an agent to represent you?
Yeah.
She's like, "I do, but I've never met him, and he hasn't like hit me up." I'm like, "Well, great. I mean, I can definitely be of assistance."
Yeah.
And so
And I
they're
mean,
like, they took they
quick pause. That goes to show, having a good agent, because this girl, her agent was not willing to show her a home, so she showed up by herself.
right.
Caesar, if he would have been her agent from the get go, he would have been like, "Yeah, I'll show you this house." Like,
Yeah.
but back to the story.
All right, thank you so much. So they told me they were pre-qualified, but they were looking at this price range, but they really needed 4 bedrooms and above.
Mhm.
And this really price range was really hard to hit at that time. Like
Yeah.
when we got that deal through, like that was like like such a like
Everybody was looking for
reliever.
that.
It was
Like,
such a reliever because there was only like 16 or 10 homes around that price range with 4 bedrooms.
mhm,
So it was really hard. So when they came into my hands, I initially thought, I mean, like this is a family that's ready. They're pre-qualified. They're looking to buy a home. So cool. Show them around. Later on, we learned more about their information and what they were kind of dealing with, and I introduced them to, of course, Alex because he's my go-to loan officer. Whoever they were dealing with was seemed to be like it was like really really tight, and kind of just didn't explain a lot of things to them. Whenever I explained to them certain things about fixer uppers, I mean, they said they're like, "Oh, but this house is 300,000. Like, why can't we get it?" I'm like, well, the home needs to be like in a livable condition in
mhm,
order for them to buy it
to
with
buy it, yeah.
FHA and government backed loans.
Yeah.
So they didn't know stuff like that. They would
Mhm.
just be like, please get this offer through to this
Yeah.
house, even though it's like not like livable condition. We're down to buy it because it meets our requirement of 4 bedrooms. It's above like 1,600 square feet, and it's a good neighborhood. So let's do it.
Yeah.
But they didn't know all those things that I had to be in livable condition. So once I transferred them to Alex, Alex can go off and tell you a little bit about them. But we learned so much information because he actually got to look into their income and what their situation was like that, and we learned that this probably wasn't a good time for them to buy.
Yeah. And so even okay, so taking it from there, I know they showed up to the house because, and I will say they thought they were pre-approved. And the really reason I say that is this girl was, married, and her husband had gone through some financial problems.
Mm-hmm.
His credit wasn't the best. He kind of owed a lot of debt.
Mm-hmm.
They were trying to go FHA, which
Mm-hmm.
was the best route for them. You know,
We could say because this could probably
help some people.
help
Yeah.
someone who has
Okay.
faced
So
bankruptcy
here in
or
Nevada, we live in something that's called a community state. If you're ever going to use FHA, USDA, VA, whatever the case may be, like a government-backed loan, we need to take into account your either husband's or wife's debt.
Mm-hmm.
Um, they don't have to be in the loan, but we need to take their debt into account because the fact that we're a community state, as soon as you get married, you're basically saying, I'm acknowledging that their debt is my debt is their debt. We're in this together. It's a partnership. And so we just have to take into account.
Yeah.
Um, she thought she was pre-approved for,
Mm-hmm.
the that 350 price point. I talked to them and I was like, okay, let me run your credit. Your credit's good. Cool. Are you married? And she was like, yes. And I'm like, okay, I need to run your husband's credit. As soon as I said that, she kind of shut down. She was like,
Mm.
"Oh, like what do you mean?" She was like, "The other loan officer that approved me didn't say that." And I was like, are you sure? Like what type of loan did they do? Like if it's conventional, then your significant other does still have to sign a
Mm-hmm.
paper saying I'm
Yeah.
acknowledging it. But then yes, we don't have to take their debt into account.
To a certain extent, that previous loan officer either assumed or didn't ask that if
They didn't ask the right questions. I
that
don't
if they
want to
were
say they didn't do
married.
their job. They just didn't.
No, no, just be honest. Like that certain loan officer didn't ask if that she was married, or two, he assumed that she was single. Because I do remember her saying that she was gonna buy the home with her son.
Yes, yes.
So, with
And
that being
so
said, if she worded like that way and went up to the loan officer, I want to buy a home with my son. Like I'd be like, oh, okay, cool. So like you and your son only, right? Okay, cool. So then, maybe that she just talked
yeah.
her way out of it.
And so like I said, there's still questions that need to be asked, especially coming from a community state property. It was supposed to be her and her son, and she told me that up front too. But then I was like, okay, you're married. We can do the loan without your husband being on title, whatever the case may be. We still need to take his debt into account.
Mm-hmm.
Comes to find out, her husband's been through some financial problems. His credit score is really
It's
low.
like bankruptcy,
Like,
right?
yeah, he
So
he
to be
owes.
honest, we're not saying any names, but like bankruptcy, in order for you to get pre-qualified or approved for a loan, like if you're in a bankruptcy stage, like it takes a certain amount of time for you to be cleared from that. And that's what we faced in the situation that he
Yeah,
wasn't in that time frame, right? So that time didn't come in that time frame. It wasn't up yet.
It
So
still hasn't passed. I mean, we're still kind of in talks with this person, but it wasn't, and we'll kind of get into it, but just wasn't the right time for them. When I looked at her husband's report, I was like, okay,
mhm,
from what I'm seeing, your husband needs at least another year of wait time before that gets removed from his
remove.
credit report.
But even then, even if the bankruptcy didn't happen,
Mhm.
it was still an issue, right?
No, yeah, and
It
we'll
was
get
still
into
an
it. Like
issue.
it was still like that was just like
Yeah,
like
but I
peeling
just want to
back the
make it known,
onion.
like
Yeah,
even if that, like his husband wasn't in bankruptcy for that, and the time passed, so what is it, 7 years?
7 years. Yeah,
So we were on the 6th year, and we wanted to wait one more year for them to like get actually qualified. Even if that time ran out, like there were still a lot of things that weren't
yeah,
in place.
there was a lot of things with this certain scenario
Yeah.
that
Hmm.
regardless, it would have made the right choice for them to wait.
Yeah.
But this was just like this is going back to it, and it's not to toot my own horn. You don't have to choose me. I'm sure Caesar's telling you don't have to choose him.
Mm.
It goes back to the loan officer because it breaks my heart because she thought she was pre-approved. She's showing up to these houses because she thinks, you know, she can quote unquote buy this
Yeah.
house. She's
She
like, I'm
saw it
pre,
on Zillow. She's
yeah,
like, I want to see it.
yeah. She's like, I'm pre-approved for and I don't want to say the price one either, but it was in the three
Hmm.
hundreds. She's like, I'm pre-approved for this amount. I'm gonna show up, and then like Caesar sent it to me. I got deep into it, and I started figuring out more things, and I'm like, oh, okay, like I'm gonna be honest with you. You can buy a home, but maybe not at this price point
Yeah.
because of X, Y, and Z that's going on.
Hmm. And
Um,
so the challenge that came with that is that there wasn't a lot of homes in that price point. Like I said earlier, there was only probably like 15 homes within the whole like city that was four
yeah,
bedrooms.
yeah.
That was above 3 bedrooms, so 4 bedrooms and above at that price range. And she didn't like many of them because of course, like everybody who wants to buy a home, they want to buy.
You're looking for what you're looking for.
Yeah,
Yeah.
she was looking what she was looking for, and at that time, it was already a lot of stretch, right? With either down payment, I think most of her down payment was also borrowed.
It was gonna be borrowed.
It was going to
Yes.
be borrowed, which is okay, but you know, even then, she was getting it really stretched by her having to owe that back. And on top of that, interest rates were a little bit higher than what we originally expected.
Hmm.
So her monthly mortgage payment was going to be up there, which was above what she was renting for. And so that was cutting it a little bit short also.
Yeah.
So a lot of things, if those things don't make sense, I mean, we like these situations because we can create a path for you.
Yeah. Like we told her, and I guess I mean even just I just want to throw this in there. Like for a little bit there, I feel like she didn't believe me. She was like, "No,
Hmm.
this loan officer told me this,"
Yeah.
and so what I told her is, okay, go back to that loan officer that told you you can buy at this price
Hmm.
point. Tell them, hey, by the way, I'm married, and this is what's going on with my husband. Am I still approved?
Hmm.
And I'm like, and that's all you have to say.
Hmm.
If you like don't trust me.
Hmm.
She went back, I guess, told that loan officer exactly what I told her to say. Called her the next day, and she's like, yeah, that loan officer told me that I'm not approved. I
Hmm.
can't buy a home.
Yeah.
And I was like, that's that loan officer didn't dig
You're like,
deep enough
ah,
to
let's
like,
talk
like
about.
and I mean, I told her, I'm like, okay, at least the good thing with me is I knew that from the get go, and so you can buy a home, but it has to be way lower than what she was expecting to,
Uh-huh. And
and she wasn't at the point where that's what she wanted.
yeah.
Like maybe it would have been a good starter home, but she didn't want to start a home because, as you mentioned, it was her husband, their kids, the grandma. Like she was
Yeah.
like, for me to move into a starter home is kind of moving backwards from my apartment.
Yeah.
So she's like, I want to buy something bigger.
Something nice.
And
Yeah.
so, me and Caesar had to have that serious conversation where it's like, hey, maybe right now is not the right time to buy.
Yeah.
It doesn't mean you can't buy. You got approved for this amount, the lower amount. And there's a path forward to get approved into that bigger home that you're looking forward to.
Mm.
It's gonna take some work.
Yeah.
We're gonna have to wait till that time passes for your husband's, financial problems to, go behind. We're gonna have to save a little bit more money because as Caesar mentioned, a lot of her down payment was being borrowed. Like
Yeah.
they didn't even have it. It's their family was gonna let them borrow it, and the family was it wasn't a gift. The family was expecting for them to pay it back.
The money
So it's
return.
like
Yeah.
they're gonna move into this payment, and not only are
Higher
they gonna have
payment.
this payment, but they also have to pay back this
Get that back. Yeah.
this loan, and it's just realistically, it just didn't make sense for them. If we would have done the loan, and maybe we could have, like, I'll be honest, maybe there would have been a way that we could have make it
Definitely. Yeah.
happen.
We could always make it happen.
And he would have made money, I would have made money, but that wouldn't have been the right thing for that
Yeah,
borrower.
no, it
They would have been in
wouldn't.
a situation where month to month they would have been struggling. Month to month they would have been like, "Is this the right thing for me? I
Yeah.
kind of messed up. I shouldn't have bought this home."
They would have to be eating like beans and rice every single
Yeah,
day.
and obviously we don't
And
want that.
yeah.
Like, we want people to be happy with their purchase. It's like,
Hmm.
you, at least for me, like, I love showing up to the signings, and we've done it. We go in, sign the papers, we walk out to the parking lot, and we're popping like champagne bottles. Like, it's like
What?
fun. Like, the people, like, 100% are excited and ready for this, and they're fully aware of what's going on. Like, hey, this is gonna be my payment. I'm aware of it. I'm
Yeah.
ready for it. Like, let's make it happen.
100%. Yeah. So I mean that kind of concludes pretty much of the kind of clientele that comes to us looking and desiring to buy a home, but maybe aren't ready just quite yet. And a lot of it is to blame for what the real estate market looks like right now. I
Yeah,
mean, the real
like,
estate market is pretty much in a great position where it's a safe investment and it's a growing investment. And throughout time, like time has shown that real estate always wins.
it's the way. Yeah,
It's gonna keep winning, and we're gonna keep putting. I don't want to say keep putting people in these situations, but people are gonna find themselves in situations where they want better or more, but they're just not there yet.
yeah,
And so, I mean, these are great examples to also showcase what the potential can be of yourself and your family, but you also need that pathway. So you need to do that research. You need to actually do the work. The work is literally finding the people, connecting with people, and knowing what your situation is and how, like, what does it take for me to get there. And so that's what Alex provides. That's what I provide. And moving forward, I think we could make this an example of what the future is going to look like. So moving forward, we can talk about like what the real estate markets looks like in here in Las
yeah,
Vegas. And I know both Alex and I are real estate investors with itself, so we talk the talk. We put our money where our mouth is.
yeah.
Like, we're not just like he's not just a loan officer and lives in an apartment like 24/7 and doesn't own anything.
No,
Like
I have my own
he's done
homes.
his
Like,
he's done his real estate
yeah,
investment, and he could put his money where his mouth is, and he's seen his real estate grow with equity, and so have I. I mean, I've bought multiple properties, and I've seen my equity rise. And right now, I'm not gonna lie. I mean, he knows as well. As soon as rates drop, I'm going to
yeah.
refinance.
We're gonna be
We're going to
sitting pretty. Like,
refinance, and we're going to go down there. But we know that we're prepared for that situation because we know what we're looking into. We know what we're talking about. So, with that being said, I mean, we still have plans to keep
yeah,
reinvesting.
absolutely.
I know Alex has
Like, I
plans.
know you're at a point where one of your properties you have over, what, 100K in equity. So
Hmm.
do I. Like, in one of my properties, I have over 100K in equity.
Hmm.
If I mean, like, it goes back to the thing that we talked about at the beginning.
Yeah.
Um, if we had to pay for our buyers agents, commission, maybe we could,
Yeah.
but it's because we're not first time home buyers.
Hmm.
But we were first. When I bought my first house, I couldn't. I had my down payment and my closing costs. I couldn't have paid for the buyer's commission. I don't know
Hmm.
about you.
In my situation, I probably could, but that would have been it. I
Yeah,
wouldn't have no
you would have been like, no
reserves.
reserves, exactly.
So
Um,
it can only get harder from here on out. And what I want to talk about now in this next topic would be our kind of plans. So I know moving into this market, I'm looking to buy into another real estate property for an
so am I.
investment.
Yeah,
I know Alex is too, and we kind of want to like put our money where our mouth is, so you can see what that kind of looks like. And I'm in a place where I've gotten always conventional loans, and these conventional loans require for you to put down like, well, if you're a first time home buyer, it takes what,
3%,
3%. After that,
5%.
5% for any other home that you're willing to buy,
As
about like a
long as it's the
year.
primary, though.
As long as it's a
As long as you're
primary
moving
home,
and willing to move into it.
as
Yes.
long as you're willing to move in, and it's a year out.
Yes. You only got to live in it for a year,
You
and
only got to live in it
then
for a year. 5% down on the second or third home, but it's gonna be your primary home. So if if I was to get into this other home, I would have to intend to live in it for a
A
year.
year.
I would come down 5%, right? And in this situation, if I'm going conventional loan, I'm already looking at this. So I want to educate people on how much seller concessions we could really bargain on. Like, I want people to take this moment from at least December to March to realize that this is
Yeah.
their time for them to kind of go in and get a great deal and not be afraid to be a little disrespectful, right?
Like, yeah, just throw in offers.
Throw
Like,
in offers, and it's going to take time. I know there's limited inventory, but if you are okay with, you know, coming out with, that win-win out of the 20 homes you put in offers, then this is your time.
yeah.
If you need a home now, then of course, go on, going with your strong offer, put in the offer you want to put in, and if it makes sense, it makes sense. But if you're willing to take a little bit of risk
Yeah. And just wait
in
a little bit,
order
and
and in order to upside for a great deal, then this is your time from December to, we can agree,
about
March.
March,
Would be a good
basically
time.
winter time, once spring hits, things start to
Yeah, 100%.